Puneet Chhatwal, Managing Director and CEO of Indian Hotels, was in conversation with Nikunj. Let's hear him out.
Well, it gives me great pleasure now to bring on board Mr. Puneet Chhatwal, man of the moment, to talk about another blowout quarterly performance for Indian Hotels for the quarter gone by. Mr. Chhatwal, fantastic to have you back on ET Now. Thank you for joining us. You know, as journalists, we like to be critical in terms of finding fault lines, but I have your income statement, I have brokerage reports, and I have the transcript of previous interviews, what you've done with us. I cannot find a simple fault line. Stock at an all-time high, profit at an all-time high, margins for the quarter gone by 30 plus. Normally we ask the management, tell us the good news, but I want to start differently. Tell me the bad news, because I cannot find one.
Nikunj, thank you for having me. As always, with your very first question, you get me speechless. So the bad news is that we don't have more hotels in Delhi, Mumbai, Goa. I wish in Goa we did not have 25 outlets, we had 50. I wish we had a few more hotels in Lutyens, Delhi, and I wish we had more hotels in Mumbai, especially at a ginger level, that our hotel in Santa Cruz, if COVID had not come, would have been open by now. So we would have been firing even, more strongly than we have done. But that's why I always say the best is yet to come. So let's see how things evolve as of October when we open some of these properties. And we're going to open 20 more hotels this year. At a minimum, if not more. So we are very pleased with the way business has shown a rebound, and also a demonstration of, COVID came, COVID passed, but the resilience of the sector, and within the sector, the resilience of India's largest hospitality ecosystem, and the testimony is our results. So I have nothing to say there.
Your Q3 margins were above 35%, but that is a seasonality was at play. But for the quarter gone by, when the seasonality should have faded away, your margins are at 32.9%, almost 33%. What happens now going forward?
So, Nikunj, firstly, the 32.7 is the annual EBITDA margin. For the quarter that is gone by is at 34%. And the quarter 3 was 37. So Q3 and Q4 Q3 is always the strongest, Q4 is the second strongest. And going forward, the guidance that we have given is 33% EBITDA margin over a business cycle. The idea would be that we keep the margins the way they are, but keep increasing the top line. So I think very important is to increase the top line, and a 30 plus margin in our sector, which is, we're not talking standalone. In standalone, we are getting close to 40% margin. But with hotels in London and New York and Cape Town and, all that international businesses that we have, to get a consolidated level, 33% is a very healthy margin. And if we can get more, obviously we'll take more. But the idea would be to keep growing the top line in a very strong way. So what used to be pre-COVID 4,500 crore consolidated revenue has gone up to almost 6,000, despite almost 90% of the growth coming from an asset-light base, which means the fee-based business. So I think that is the focus, that is the guidance we have given, and we'll continue in the same direction.
My next question, Mr. Chhatwal, is that do you see this kind of a trend to continue for the industry for at least next 2 to 3 years?
Absolutely, because of the demand and supply. See, the demand has come back, and at the moment only domestic. The foreign tourist arrival to pre-COVID is yet to come, but the supply growth has slowed down significantly because of COVID. So demand is outpacing supply, and demand will continue to outpace supply. So because of that, definitely the next 2 years or so, or even longer, I would say that we can expect healthy room rates increases, healthy occupancy increases, and also because the increase was overdue. Since 2011, 2012, there was hardly any increase in the sector in average rates. So I think it's all come back in a very strong way.
Have international businesses stabilized, or there is still a seasonality at play there?
They have not yet reached the 1920 level on the Western Hemisphere. Dubai is very strong. Maldives has done well. Sri Lanka is coming back after that disruption of a year or so. But where we are still at 92, 93% of pre-COVID is UK with London and New York and San Francisco and also Cape Town. But we are seeing a very good recovery in London this month and also in New York. Both London and New York and Cape Town, all three are performing well. San Francisco is lagging a bit behind, but we expect that to recover also soon.
Mr. Chhatwal, while the leisure part of your portfolio has done exceedingly well, the delta for any large hospitality change will always come from the business traveler. When we spoke to you last time, you alluded to the fact that that is looking good and strong. Are you confident that the business traveler segment, which is a main contributor to your metro revenue and big city revenue, will also be strong?
I am more than confident that it will be strong, especially because of the G20. We have the G20 and the B20, which is also coming up. There is a lot of demand for rooms, for meeting rooms, for conventions, for large dinners and banquets. So I feel personally that this is going to be very strong, but also leisure is not really purely leisure anymore. The term leisure was coined maybe 10 years ago, but today business with leisure or leisure with business, vice versa, is working very well in most of the destinations which are well connected. All you need is, good connectivity by air, by road, and finally with a strong Wi-Fi. And people are adding, like let's say the next weekend, with Monday being a holiday, there's no reason why people may not take Friday as an extra or add Tuesday to it and do some business from wherever they are traveling to.
Are you growing because the sector is growing, or are you gaining market share because of Taj brand?
So, Nikunj, Taj is definitely our crown jewel, not just for Indian hotels, but for the nation. It's world's strongest hotel brand for 2 years in a row. We have made a lot of growth in the Taj brand. 5 years ago, we had 31 hotels in operations. Today, we have almost 80 hotels in operations. And 25 of those have come from within because a lot of hotels were downgraded because of lack of renovation. So we've used effective asset management also to bring back our key assets back into that position where they rightfully always should have been. And also we have added new hotels and great properties and resorts, like you mentioned, whether it's a Taj Rishikesh or a Taj Chia Kutir in Kurseong, Darjeeling, or the new ones which are coming up this year, the Taj in Gangtok. So there is a lot of happening, and we are gaining market share every month on month. We are gaining market share. We are gaining presence in so many markets, and we are also assisted very well. Not
All right, that's the management of Indian Hotels, Puneet Chhatwal, confident that leisure travel is going to pick up. They will continue to gain market share, and the only negative is that there aren't enough hotels from Indian Hotels as of